When a nation gets squeezed, when the capital gets trapped, they turn to Bitcoin. Let's start with Iran. This war is far from over. Saudi Arabia is routing oil through Fujairah, and as they've been doing that, Fujairah has been attacked 7 or more times this week. Supply chains will continue to be stressed, and we haven't seen even the beginnings of inflation from what's going on. And in the middle of that, you get reports that Saudi Arabia is freezing Iran's financial asset, and all residency permits are being revoked despite 99-year protections. Sounds like hostile territory to me. And when that happens, people look for a way out. And that's why 6 to 8% of all hashing going on in the world, reportedly, is coming from Iran.
Countries like Iran, for example, last 5 years, they've been using Bitcoin mining as a way to get around sanctions. So they almost hit about 6 to 8% of global mining. If you look at chain analysis and Chainlink's data, was global mining. About 6 to 8% of that was Iran, and almost about 70% of the Iranian miners were owned by the IRGC. So they were using mining as a way of getting around sanctions for a while, right?
Think about that. When a nation gets squeezed, when the capital gets trapped, they turn to Bitcoin. That isn't a sign of smooth sailing. That's a sign of stress and more stress to come. War creates volatility and it creates panics and it creates more dislocations and more sell-offs. Not smooth sailing. Now, here's where the true test comes. Because if we are in an actual crisis, well, then gold should be the safe haven. But gold is showing weakness right now. Look at Turkey. It has a volatile currency, inflation pressure, and if there was any place that would be using gold to defend its own pagan in themselves, it would be Turkey. But they just had one of the largest gold sell-offs in its history. Their gold reserves dropped 50 tons last week, their largest sell-off since 2018. That should tell you something. Gold is supposed to be the safe haven, and that tells me that there's real turbulence in the market right now. And then there's Japan. Japan is one of the core pillars in global debt markets, and if they start to unwind their U.S. treasuries, well, look out below. They've suppressed rates, they've implemented yield curve control, and they've tried to monetize their debt in multiple ways. In an interview with the ex-head of central banking for the Bank of Japan, Kuroda says that their market should raise rates. This isn't a small story because this means the unwind of the global carry trade, which props up stocks in markets all across the world. And professional investors, when things tend to get more risky, they don't pile in. And right now, professional investors, hedge funds, private equity firms are hitting the exits. Investors have sold $13.5 billion worth of equities and stocks in the last 4 weeks. This is the 4th largest since the great financial crisis. This isn't just some blip.